This is Ryan with TrendLizard.com. We have another ETF that I'm going to take a look at for you, Armando, by request from your email. We looked at TLT, the 20-year Treasury Bond ETF. Now we're taking a look at XLP, which is the Consumer Staples ETF, trading on the NYSE. So I think I've looked at this one for you before. Let's do an update for you. Since 1999 is how far back our data goes here. We had a nice three-wave pullback into the 2003 low. From there, it kicked off a nice five-wave advance that was followed by another three-wave pullback. And since the 2009 low, like the rest of the market, XLP has been in a massive advance that looks like it's getting closer to an end, but it's not there yet. And I'll take a closer look and show you exactly why that is. So let's go ahead and do that. We're going to zoom in and look at this action here. Here's a look at the action off the 2015 low. You can see the initial upleg into the 2016 high was a very clear five-wave advance, trendy bullish stuff. Since then, it's been kind of a choppy mess back and forth. It has set some new highs, but it's retraced most of that. This was very clearly a three-wave move off the late 2016 high into the 2018 low. So that's a clear indication that this was not part of the uptrend. This was actually all part of a big counter trend pullback. So the bullish thing that's happened for XLP, and it has been relatively strong compared to the rest of the market, but off that 2018 low, it has been really strong. For example, there's a couple ETFs that are back towards their 2018 lows right now, a couple U.S. market sectors that are all the way back down here. The NASDAQ or the triple Qs, which is what we trade in lieu of the NASDAQ, is already below this low right here that was recorded in October. So you can see that XLP has done really well. That's a bullish thing. The other bullish thing is the fact that it's retraced almost all of the 2018 pullback here. So that's a very clear indication that this is still just part of a counter trend move. A major high is not in. XLP is going to continue higher, and it might continue significantly higher. The question is the pullback finally over? So I think it is. It's hard to be super confident just with what's going on with the overall market, but certainly the potential is there. The key level on this time frame that needs to be watched is 51.25. So as long as XLP is trading above 51.25, the potential will be there that this low that occurred back in May 2018 is the low for this nasty, ugly pullback that happened here, and that it will continue north from here. But let's go ahead and zoom in and take a little closer look at this action off the 2018 low. So here it is. Here's the advance again off a May's low. It looks like the initial upleg was a clear trendy five-wave move, followed by a counter trend three-wave pullback into October's low, and it has kicked off to the upside again. And again, this is a real relatively strong move. We're just not really seeing many bullish looking U.S. market sectors at the moment, so that puts Staples kind of in a class of its own. It's obviously not a bad thing. It just makes me concerned of doing anything too aggressive anywhere until it's clear that the overall market is on our side, just to avoid kind of a swimming upstream type scenario. But here's again the key level that we talked about before, 51.25. XLP needs to stay above this level. If it moves below this level at any time, it indicates that the big choppy mess is still not yet done, and that'll probably lead to a revisit of the lows that were recorded, at least somewhere in this yellow area. We would expect it to head from there. But as long as it can stay above that level, that'll be a bullish thing. An early warning would be a move below 53.50. So I don't know that you necessarily want to use that level as kind of the end-all level, just because it's possible that this labeling isn't quite correct, and that that it's still bullish as long as it stays above 51.25. But if you wanted to have a closer stop level, the first warning sign that we would have that something is amiss and that XLP is breaking down with the rest of the market would be a move below 53.50. But again, the most important level is 51.25. It needs to stay above there. So if you own this guy, I would use a stop at 51.25 myself and stay bullish from there. And again, if it moves below that level, you certainly don't want to partake in this guy at this time. So if you were looking to buy, I think you could basically buy any kind of movement back up towards November's high. It'd be a good sign that this thing is continuing and that it is in fact heading higher directly from here. So hey Armando, I hope that's helpful. Again, this is Ryan with TrendLizard.com. We do this every day. We've kept our subscribers safe from this crazy market in 2018, kept us mostly in cash and avoided all the back and forth and just choppy mess. And if this is something that seems interesting to you and something that you would like to either learn more about the Elliott wave, or if you have ETFs or stocks or market indexes that you want me to take a look at, feel free to come visit us at TrendLizard.com, and I'll break it down for you and go from there. So, hey everybody, have a very happy Thanksgiving, and we will talk to you again very soon. Take care.